Welcome to the Daily Financial News Roundup. Let's jump right into today's top business and tech stories.
Rest is good.
First up, Google's in a bit of a cheesy situation. Their Super Bowl ad for their AI Gemini,
Yeah.
claimed Gouda makes up like 50 to 60% of global cheese consumption.
Oh, wow.
Yeah, turns out not even close. A blogger fact-checked it, and cheddar and mozzarella are actually the most popular globally. So Google's blaming the mistake on the website's Gemini pulled the information from. They've since edited the ad and re-uploaded it.
It's interesting how this highlights the issue of AI accuracy, even with Google trying to make Gemini factual.
Yeah.
There's still that chance for misinformation.
Absolutely. And all this happened during the Super Bowl. Brands spend millions for those few seconds. So a mistake like this becomes a big deal.
It reminds me of Uber Eats last year having to change their ad after it got so much criticism.
Right. Google's also making headlines for ditching their diversity recruitment goals.
Yeah, that's a big shift. They used to be very vocal about diversity, equity, and inclusion, especially after George Floyd's murder. Now they're joining other companies dropping DEI targets. They're saying it's part of a policy review.
This comes after President Trump ordered government agencies to eliminate DEI initiatives. It's a complete turnaround from Google's previous stance.
Other companies like Meta, Amazon, Target are doing the same, but Apple's interesting. They're holding firm on their diversity policies.
It really makes you wonder, is this a larger trend, or are we just seeing different companies taking different approaches to DEI?
Yeah.
Shifting to international news, China's filed a complaint with the World Trade Organization against the U.S., calling Trump's latest tariff increase discriminatory.
This 10% hike on Chinese goods is meant to address the flow of illegal drugs, specifically fentanyl, but China says those accusations are unfounded. This trade war has been going on since Trump's first term.
And it's already having an effect. Businesses are rushing imports before the tariffs hit. Political tensions are rising with China's retaliatory measures, and there's a chance of an economic slowdown.
This raises the question about how effective tariffs really are. Do they achieve their goals or just create more problems?
Right, and what about the WTO's role in all of this? Can they really resolve these disputes, given the U.S.'s current stance?
Exactly.
And speaking of tariffs, the U.S. Postal Service actually had to temporarily stop deliveries from China after those new tariffs came into effect.
This was because Trump ended tax-free shipping on packages under $800. Remember, that used to benefit Chinese e-commerce giants like Shein and Temu. But people criticized it, saying it hurt American retailers and lost tax revenue.
The USPS has started deliveries again after setting up a system to collect tariffs. But this whole situation highlights the de minimis exemption and how it impacts global trade.
The EU is considering similar measures. They're worried about unsafe products from Temu and Shein and want more customs checks on e-commerce shipments.
This could be a big change for international trade, especially for those low-value goods. It makes you wonder what the impact will be on consumers and businesses.
We're seeing some companies like Monsoon Accessorize supporting the changes, saying Chinese retailers were taking advantage of the loophole, but others are worried about prices going up and possible disruptions to supply chains. It's complicated.
Now, Alphabet's back in the news. They revised their AI guidelines and removed restrictions on AI being used for weapons and surveillance.
That's gotten a lot of criticism, especially from Human Rights Watch. They're concerned about accountability. If AI is making decisions on the battlefield, there's a fear this could lead to autonomous weapons with unpredictable consequences.
It's a serious issue, especially after seeing how AI is being used in the conflict in Ukraine. It really makes you think about the future of AI and how to control it to prevent misuse.
We're at a crucial point in AI development. The potential for good and bad is enormous. We need to be talking about the ethics of all this. It's not just a tech issue, it's a societal one.
Mattel, the company behind Barbie and Hot Wheels, is warning about possible price increases because of Trump's tariffs.
They say they might have to adjust their supply chain and possibly raise prices to deal with that 10% tariff on Chinese imports. And this is happening while the toy industry is already facing slower sales because of the higher cost of living.
So families are feeling the pinch. And this could make things even harder.
It shows how interconnected global trade is and how tariffs can have a ripple effect across industries, ultimately impacting what consumers pay.
And let's not forget the bigger picture. Trump's tariffs on China are happening, but he's also paused tariffs on Mexico and Canada while they work out border security negotiations. It's constantly changing, which makes it hard for businesses to plan ahead. Speaking of changing things, remember Trump's plan for a U.S. sovereign wealth fund? He just signed an executive order to create it, and get this, he suggested it could be used to buy TikTok.
That's a surprise, especially with the U.S. budget deficit. These funds are usually funded by extra income like oil revenue in countries like Norway and Saudi Arabia. It's not clear where the U.S. will get the money, though Trump has mentioned tariffs before.
It's definitely raising eyebrows. What's the purpose of this fund? How will it affect the U.S. economy? And what does it mean for TikTok, especially with Microsoft and other tech giants already involved?
This is going to be an interesting one to watch. The potential impact on tech, global trade, and U.S. economic policy is huge. It's a real wild card.
To wrap up this part of the roundup, let's talk about something new, shadow AI.
This refers to the growing number of employees using their own AI tools for work without their IT departments knowing or approving they're doing it for more flexibility and access to specific tools.
Things like ChatGPT and Cursor, all those AI apps that help with productivity, but there's a downsides in there.
Definitely, while these tools can be useful, they also come with risks. Some AI applications learn from the data users enter, which could expose sensitive company information.
So data breaches, loss of intellectual property, a whole host of issues for companies trying to manage this trend.
Exactly. They're trying to balance the benefits of AI with a need for safeguards to make sure it's being used responsibly.
We're back with more financial and tech news. All right, let's get back to it. Alphabet's healthcare subsidiary, Verily, is making some moves. They're selling off their stop-loss insurance business, granular insurance to Elevance Health.
It seems like a shift in strategy for Verily. They're streamlining their healthcare focus and separating from Google's infrastructure.
Yeah.
Verily's gone through a lot of changes since it launched in 2015, from developing hardware to pandemic response to precision medicine.
This sale seems like a way for them to consolidate and refocus.
Yeah, and there have been some leadership changes too. They brought in people from Apple's health team, but they've also seen some key people leave, so it's definitely a time of transition for them. This sale might be a sign of their changing strategy in the healthcare tech world, which is getting more and more competitive.
Speaking of competition, Pinterest is doing really well. They just had their first billion-dollar revenue quarter, and they're saying their AI-powered taste graph is a big reason why.
That taste graph connects user behavior, content, and products. It's what powers their recommendations, and it seems to be working. They've seen a 75% growth in connections over the past 2 years, which led to a 90% increase in clicks to advertisers from last year.
They're proving that user engagement can translate into real profits.
And they're not just using AI for their users, they're using it internally too. 15% of their code base is now generated using AI assistance tools. It shows how AI can improve both the user experience and how a company operates.
From AI causing problems to AI bringing in billions, it's been quite a week for Alphabet.
Now let's move on to Amazon. They're making a splash with their AI shopping assistant, Rufus.
Rufus is all about making shopping easier. It helps people find information, quickly summarizes product reviews, and retrieves past orders.
It's Amazon's answer to the overwhelming amount of information people often face when shopping. Online CEO Andy Jassy actually talked about Rufus during their latest earnings call. He emphasized how it's improving search personalization and the overall customer experience.
For something a little different, Elon Musk is in the news again. He offered to fund a show called 69 Minutes on X, formerly Twitter. He says it'll be hard-hitting.
This comes as President Trump is still battling it out with CBS over a 60 Minutes interview they did with Vice President Kamala Harris. Trump claims the interview was misleading, while CBS says it was accurate.
Musk's proposal is a bit vague, but it's definitely got people talking. It suggests that X could become a platform for alternative news and commentary, which raises questions about how they'll handle content moderation and the political implications of all that.
It's a bold move, and it'll be interesting to see what happens. It could change the media landscape even more, blurring the lines between traditional news and social media.
We've covered a lot today, from AI cheese mishaps to potential media shakeups.
But there's more to come.
Stick with us as we dig into Amazon's huge investment in AI, the future of global catering services, and a potential trade war wildcard that could affect everything from the price of your medication to how much you pay for shipping. Let's shift gears and talk about Amazon's massive AI investment plan. They're looking at putting in almost $100 billion in 2025.
Wow, that's a huge commitment. Bigger even than what Microsoft and Alphabet are doing. It really shows how dedicated Amazon is to being a leader in AI.
And it's not just one area they're thinking about using AI across the board: retail, customer service, inventory management. They even believe AI can help them be more productive and save money in the long run.
It's interesting timing because this massive investment comes as a new player emerges in the AI field, DeepSeek, a powerful AI model from China that's completely free to use.
So is Amazon worried about this new competitor?
Not really. Their CEO, Andy Jassy, recognizes DeepSeek's potential, but he thinks that as the cost of running these AI models goes down, companies will end up spending even more on AI because it'll open up so many more possibilities.
Makes sense. Now let's zoom in on a specific industry, the global catering services market, which is projected to grow by a whopping $73.2 billion between 2025 and 2029.
That's a huge jump, and it's being driven by a few things. The rise of online catering, smarter marketing strategies, and of course, changing consumer preferences. The way we live is changing, and that's affecting what we expect when it comes to food and dining.
So it's not just about delivering trays of sandwiches anymore. Catering companies have to keep up with these new demands and use technology to connect with their customers.
Exactly, and there's some challenges too. Unpredictable food prices can squeeze profits, and catering companies need to be adaptable to meet those changing consumer lifestyles.
Speaking of adaptability,
Yeah.
let's consider Denmark. They might have a surprising amount of leverage in a potential trade war with the U.S.
You're talking about President Trump's interest in buying Greenland. That created some tension with Denmark, and while Denmark might not have a powerful military, they do have some economic cards to play. Well, they're home to Novo Nordisk, the company that makes those popular weight loss and diabetes drugs. Ozempic and Wegovy, disrupting that supply chain could have a big impact on American consumers.
That's a huge factor.
What else?
Maersk, one of the biggest shipping companies in the world, is also based in Denmark. If they were to halt their operations, that could really mess up supply chains here in the U.S.
It shows that even countries that aren't considered superpowers can have a big influence on the global economy. These trade disputes can have ripple effects everywhere.
It emphasizes the importance of diplomacy and strong international partnerships when dealing with these complex trade relationships.
Shifting gears to the ride-hailing world, there's been a lot of talk about Tesla's autonomous driving network and if it can challenge Uber's dominance. But Gary Black from the Future Fund isn't convinced.
His point is that Uber's massive user base, 170 million active users every month, is a huge obstacle. He compares it to Amazon, where individual sellers have a hard time competing with the sheer size of the platform.
So even with groundbreaking technology, breaking into an established market is really tough. It raises the question of how Tesla will position their robotaxi service once it's up and running. Will they go head-to-head with Uber, or will they find a way to work together or focus on a specific niche?
That's a big strategic decision that could change the face of transportation.
Finally, let's touch on tech diplomacy. Mark Zuckerberg, the CEO of Meta, met with the Trump administration to talk about how to promote American tech leadership around the world.
That's interesting considering their history hasn't always been smooth sailing.
You're right, things were tense after Meta banned Trump's accounts in the wake of the January 6th riot. They eventually lifted the restrictions, but there's been some lingering tension, so this meeting suggests they're trying to build bridges.
It makes sense for Meta to strengthen their relationship with governments, especially with all the regulatory scrutiny and geopolitical challenges they're facing.
It looks like Zuckerberg is playing the long game, positioning Meta for success in a world where technology and politics are more intertwined than ever.
And that wraps up our look at today's financial news.
We've covered a lot, from AI blunders to potential trade wars.
We've seen how AI is becoming more and more powerful, but also how it raises important ethical questions and creates challenges for businesses trying to manage its impact.
And we've explored the complexities of global trade and how even smaller countries can wield significant influence.
Throughout it all, technology keeps reshaping industries, bringing both opportunities and challenges.
It leaves us with a question for you. How will you use this information to navigate these rapid changes? What will you do differently tomorrow based on what you've learned today?
Thanks for joining us on the Daily Financial News Roundup. Until next time, stay informed.